Good evening, everyone. Welcome to the channel. Today I am going to talk about MMG, interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. MMG Limited offers a diverse range of businesses and services through its various segments. These include exploration and development of mineral properties, mining operations for copper, zinc, gold, silver, molybdenum, cobalt, and lead deposits, portfolio management of projects in Peru, Australia, Botswana, and the Democratic Republic of Congo. The company operates through 5 key segments: Las Bambas, Kinsevere, Comacao, Dugald River, and Rosebery. And the skyrocketing stock price of MMG Limited. A year of exceptional growth. MMG Limited's HK 1208 stock price has surged an impressive 147.58% in the past year, driven by a combination of strong financial performance and favorable market conditions for key commodities. The company's exceptional half-year financial results, boosted copper production, reduced operating costs, and strong earnings projections have all contributed to its remarkable growth. The announcement of MMG Limited's interim results for HON 2025 sparked a 12% surge in stock price, with the company reporting a staggering 11% increase in profit attributable to shareholders and a 47% rise in revenue year-over-year. Higher market prices for copper, gold, silver, and zinc also played a crucial role in the company's financial success. Furthermore, MMG Limited benefited from reduced operating costs at its Las Bambas and Rosebery mines, further enhancing profitability. The company's net profit in 2024 jumped 17 times year-over-year, with earnings projected to surge by 1.3 times year-over-year in 2025 due to an estimated 24% year-over-year growth in copper output. These factors have collectively led to the substantial appreciation of MMG Limited's stock price over the past year, positioning the company favorably in the market and making it a compelling investment opportunity for investors seeking strong returns. The primary drivers of revenue growth in the company are primarily attributed to increased production levels across various mines, including Las Bambas, Kinsevere, and Comacao. Higher sales volumes at these sites, combined with higher commodity prices for copper, gold, silver, zinc, and cobalt, have significantly contributed to revenue growth. Key drivers of revenue decline include lower zinc and lead concentrate sales at Rosebery, decreased molybdenum sales volume at Las Bambas, and a decrease in production levels for zinc, lead, and silver. These factors have resulted in an 8% decline in revenue. Overall, the company's revenue growth is largely driven by increased production and higher commodity prices, while revenue decline is primarily attributed to decreased production levels and lower sales volumes at specific sites. Net income and profit margin changes. A shift in fortune. The company's net income has undergone a significant transformation over the years. Initially, it decreased, indicating a period of financial struggle. However, a notable increase of $318.9 million from 2024 to 2025 suggests a reversal of fortunes, pointing towards improved financial health. Profit margins have also experienced fluctuations. A decline was observed due to various reasons, but an improvement is evident in the latest data. The decrease in derivative financial liabilities from 24.3 to 0.7 contributed to this positive change. This shift indicates that the company has successfully addressed its financial challenges and is now on a path towards stability and growth. The company is indeed generating positive operating cash flow, as evident from the provided financial summary. The net operating cash flows for 2025 and 2024 are $1,185 million and $515.3 million, respectively, indicating a significant increase in operating cash generation. Furthermore, the total cash and cash equivalents, trade receivables, and other financial assets amount to $1,122.2 million, demonstrating a substantial liquidity position. Additionally, the operating cash flow for 2025 is reported as $436.2 million, reinforcing the notion that the company is generating positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past period. Initially, there was a decrease in net debt from $4,442.4 million to $3,539.1 million, page 21. However, this trend is contradicted by other points, which show an increase in non-current borrowings by 7% and total non-current liabilities by 4%, page 49. Furthermore, the total borrowings decreased from $4,628.8 million to $4,241.4 million, page 66, indicating a mixed picture. Regarding interest expenses, there is no material change in interest expenses, page 27, but an increase of 53.8% in interest expense, third parties, and 29.1% in finance costs total, page 58. Conversely, the interest expense decreased from $70 million to $55.9 million, page 67. The net change in debt level is also inconsistent, with a decrease of $69.2 million, page 57, but an overall increase in total debt from $4,373.8 million to $4,419.8 million, page 75. The financial performance of the company's segments and regions varied significantly in the recent period. On a positive note, Las Bambas, Kinsevere, and Rosebery performed well, with notable revenue and EBITDA growth. Las Bambas generated $1.784 billion in revenue by metals, while Kinsevere and Rosebery reported strong EBITDA margins. In contrast, Dugald River struggled to meet expectations, with a significant loss of -$11.4 million in EBITDA. Khoemacau also underperformed, despite generating some revenue, due to its substantial segment liabilities of $1.432 billion. Overall, the company's performance was mixed, with some segments excelling while others faced challenges. Management's vision is centered around creating a leading international mining company that prioritizes sustainability and responsible practices. The company aims to achieve this through safe operations, disciplined cost management, and long-term growth. Key highlights include: copper production is expected to remain within the 360,000–400,000 ton range by 2025. Kinsevere's mine life will be extended to at least 2035, while Khoemacau's capacity will increase to 130,000 tons of copper in concentrate per annum by 2028. The company is exposed to various risks and uncertainties, including political, economic, and regulatory changes. Management emphasizes the importance of sustainable practices and responsible resource management as key drivers for the company's future success. The company's financial summary reveals that it has paid out a significant amount in the form of dividends, totaling $103.7 million. However, there is no mention or indication of share buybacks. This suggests that the company has prioritized distributing profits to its shareholders through dividend payments rather than repurchasing shares. Concerns over inventory buildup emerge in key areas. A review of recent financial data reveals potential issues related to inventory buildup across several key areas. The sales volume for zinc, lead, and molybdenum has decreased despite price increases or slight decreases, raising concerns about inventory levels. Additionally, cobalt's significant sales volume increase may be attributed to inventory buildup rather than genuine demand growth. Furthermore, the Las Bambas operation experienced a favorable inventory movement, resulting in a substantial buildup of ore stocks. Concentrate stockpiles also saw a net buildup due to community disruptions and port closures, leading to a $33.3 million accumulation of concentrate inventory. These findings suggest that inventory buildup is a pressing concern in these areas, potentially impacting future operations and profitability. That concludes the financial summary for MMG. Feel free to comment below, and I will be happy to answer them when possible.